Yeah, so welcome to Pay Less Tax, guys. So the intent today is to have an expert on board, which is Milton. So thanks for joining us, Milton. But also the premise is that the more cash you can keep in your pocket, the better off you'll be. And the man with a bigger bank account wins is the aim. And I know every business owner wants to pay less tax, whether you do it legally or illegally, it's not up to me. But so today I want to share uncover your ideas and your issues and see how we can arrive at a better situation for you. So that's the intent. And I guess to start off, let's probably introduce. Why don't we just take a little bit about yourself, Shane, and then we'll go to John, just so we can, I guess, address your things a little bit easier. And then I've got some topics I'll bring up.
Yeah.
So just give it 20 seconds, the BNI, 20 seconds. Here you are, how many people, industry?
Shane McIntosh, CEO of IT How To, also Tradie IT and Synergize Group. We basically, support trades. So that's why I'm interested in this call. Obviously service clients all over Australia.
Excellent, that's cool. Thanks, Shane. And you, John, just for the benefit of Shane and Milton, just the 20 seconds about your business of industry and number of guys and things.
I'm John, owner and operator of Fluid Tech Plumbing, based out in Melbourne, out Werribee Way. We are in the rail level crossing upgrades for state government jobs, and just private, plumbing works and gas works. But there's only me, my apprentice, and my wife. There's just a small team, but looking at getting bigger.
Excellent, that's good. And of course, you, Milton, I think you've got a colourful background.
Yeah, thanks, Hugh. Yeah, Hugh, I'm actually a business coach too, and I work with Hugh. But prior to that, I've had a number of businesses. One, initially I was with Price Waterhouse, big firm of accountants. And then I set up my own firm, built that to 10 partners and 300 staff. And then I sold all that out and then bought a rundown conference centre and built it up to be an award-winning country house hotel. Then I went down to Fed Square and I was CEO at Taxi Kitchen and the Transport Hotel Group, running that. So it's a big change. Loved it all. Now I'm coaching along with Hugh, and but I still got to do a lot of work in finance, of course, for the background.
Thank you. That's why you're here, Milton. So thanks for joining us. So just to give you guys a head start, like on some things that we could help you out, and then if it means that Milton just rolls through these plus whatever ideas it is, that's okay too. But the common questions that come up with me are around invoicing and expenses and timing of them, I guess, and how can that help you? New vehicles, everyone sort of claims this idea of saving tax by buying stuff, so is that real, and how does that look in your business, and what can be written off, what can't be written off, and I've got a feeling Shane might even have some great tips here. Knowing your bits. Also prepaying or discounts on interest or royalties and the things that often come up. Accelerated depreciation has been crowed out by politicians, superannuation, and sometimes it actually matters on, as a business owner, know enough so you can ask know what you can ask your accountant. Ask your accountant good questions, you probably get a good answer. And I've got some other tips that we'll hammer Milton on later on. But I guess from your perspective, Shane, what in particular are you looking for today?
For us, obviously, if there's anything that we're not aware of, because obviously the landscape changes from a business point of view in terms of what can and can't be claimed. Obviously, because we have a heavy trade influence in our business, things we can offer the tradies to support them around those areas as well that they may not be aware of.
Like IT solutions to trade that might help them.
Something that they might be able to claim. So in the past we've claimed government grants and different things for different trade organisations. Tax benefits, tax cuts. So if we're aware of them, we can offer them.
Oh, cool. Yep, excellent. That's great. John, have you got anything sort of burning sort of questions you want answered?
No, today's more just an info session to see what maybe can pop up, to see what we can claim on, or it's just more informative for me. Yeah,
and from your perspective, Milton, I can bring up my list again, but is that a good start, those things I brought up?
Yeah, great start, Hugh. Just to kick it off, I'm amazed at the number of businesses that get poor accounting advice. It seems to be almost the norm rather than what you choose. So, new client yesterday just got his tax return completed by his accountant for last year, got a $160,000 tax bill. No idea it was coming. There was no planning, no advice. He should have asked for the advice, but however, you'd think the accountant a bit more proactive would have been planning before. So the main message is talk to your accountant before the end of June so you can do something. But it's much harder after the end of June. So if your accountant's not out there getting information up to date for you and doing some tax planning, consider who your accountant is.
Okay. Taken from an accountant, hey? Right. But still, this is my barrow, is I still think you need to know a lot yourself as well.
Yep.
And you can't sort of wholly blame someone else. So in terms of first steps, I mean, the obvious invoicing expenses there, Milton, timing of those and what trouble should you go to that?
Yeah, always, depending on whether you're on accrual or a cash system. Do you guys know the difference between accrual and cash systems?
Yeah.
You do?
No.
Johnny?
No.
It's okay. Cash just means with your BAS and your tax return, your profit and loss is based on when you pay your accounts and when you receive your money. The accrual system is when you send the invoice out. So whether you're paid or not, that shows as income in your account. And when you get bills or accounts payable, even if you haven't paid them, you can still claim a tax deduction. So if you're on an accrual system, then if you get at the end of June, bring any payments forward, and you can prepay up to 13 months for any of your normal business expenses. So that gives you a tax deduction early, as long as you've got the cash flow to afford that. So on top of that too, if you offer to pay some of your suppliers, even a month ahead helps, or several months, then you can ask for a good discount too. So you actually get it cheaper, but also bring the tax down in that current year. And I think that's something in timing you need to do as much as possible. That's on expenses side. And on the income side, if you can try and put off some income. So say you've done some work, if you can invoice it on the 1st of July rather than prior to the 30th of June, then it goes into next year's tax return.
Mm-hmm.
You've got to watch your cash flow. You don't want to lose out on that. But if you can afford that, it can make a big difference.
I think, John, you'll be accrual. Most trades are set up as accrual. That's what I find.
Yeah.
So it's just on that front, it's just a bit of tweaking around. If you've got a whole bunch of expenses, you might choose to pay them in July, early July, rather than the end of June, if you've got that choice.
Mm-hmm.
But and the only other one for you is, I guess we don't know what your tax bill is, but this is a great segue. John's just bought an excavator. I'm not sure how you did that. Was that as a loan arrangement? Or
through CAP Finance.
Yeah. Not familiar how they do that, but sometimes they have options of paying interest up front, like 12 months interest up front.
Yeah.
So what are you saying? We should check if we can pay the interest off up front?
Yep.
Yeah, if you've made good income this year, you can prepay the interest in this financial year, so therefore you brings your taxable income down. There's just some options there. I'm surprised I didn't mention it to you actually when you just bought it.
Yeah, they should have been trying to push that too, but often they're not aware of themselves. But also, Johnny, you should get 100% tax deduction on that this year, which is accelerated depreciation. So that's a fantastic opportunity in doing that. Plus also you get the full amount of the BAS. So full 10% you got to claim in this financial year on the purchase of that vehicle.
Yep.
And that makes a big difference to your BAS too, depending on how much you pay for the extra excavator.
So this is the problem I have, and I think Shane might too. So Shane, we're all trying to find out as a professional service business some big tax deductions, but we don't go and have any excavators to buy.
Yes, I've got a few for you. Obviously, cars and vehicles and stuff like that. It's always a winner. So we're about to buy another 3 for work, and for us, because obviously we have some stock items that go straight out, but we can pre-purchase some of them in advance. We have some suppliers that will actually hold it there for us, even though we don't need it.
Yep.
Right. Mm-hmm.
And you can do it on 0 payment terms.
Yep.
But you still get the invoice.
Exactly. Yep.
Yeah. We've also a side thing, which I'll have to chat to you about anyway. We're about to purchase another business, and all the assets coming under the instant asset write-off. So there's about 150,000 we can write off this financial year just by that purchase.
Yeah.
And the business is only about $200,000. So there's quite a few things there we can sort of stack up quite easily. Obviously, profit share and different thing we do with the guys. So there's another one which is kind of on the edge. Milton might not like to hear this one, but we technically can employ our children in the business.
Yep.
Because even though they're underage, they technically do tasks in the business, so we can write wages to them to a certain amount.
Okay, I thought that was quite a low amount, but yeah.
No, you can do it's the amount. They don't specify the amount. They specify the amount of hours they can work in the business while they're still at school.
Right. Mm-hmm.
So this is not about shifting money from your trust to them. This is about them being employed in the business as a PAYG.
Mm.
Yeah, Shane's right there. That is legal as long as you can justify the children are doing some form of work in the business and they're paid at an appropriate rate. That is definitely tax deduction. What you're thinking about though with children is through a trust, and used to be $400 the maximum they could get through the trust. So it was hardly worth doing. But especially if once they get around 15, 16 years of age,
Mm-hmm.
it's much easier.
Oh wow, there you go. I didn't even
So
know
you've got some big tax deductions coming here.
Yeah, you got
Yeah. Well, they're already doing some work, but they're not doing anywhere near enough. So they're expensive employees at the moment.
Yeah.
Oh, fair enough. Okay, so that's some ideas, and Johnny's got several kids too, but they're a bit on the younger age of that,
Yeah.
I might say.
They still work though. But I just don't pay them.
Yeah, I know. I need to have that discussion with my dad from when I was a kid, I reckon.
Yeah, likewise.
Okay, so what else we have on our list there was, what are some grey areas of claiming, Milton, that you see?
The grey areas are when you're trying to hold off or bring forward creditors. Of course, you have payments you owe. You've got to be careful on that, because often I've seen in the past clients that had work that hadn't been invoiced, but they still tried to claim as expenses. That's not uncommon. And the same with trying to put off income, even though they'd actually invoiced prior to June, they try to put it off to the next year. So you've got to make sure you get your paperwork in place in case you're investigated. Having said that, the tax department are really concentrating on the big players. It's very rare now I hear that they're investigating small players. It's because it's not worth their time. They want to get a decent return on putting their time. They've got their own KPIs too, so they go for the bigger companies where they get decent money back. The small players, they do lots of publicity, lots of warning to try and keep you honest.
Cool, of course. Okay, what I was trying to allude to there was things like, if you've got like a director's dinner with your wife in Cairns, is that claimable? Like, these are questions that come up.
If you keep a diary and you show appointments where you've met potential clients and or training, So yes, do some homework so you've got the paperwork in place. Make sure you go to see a client in Cairns, or or potential clients, or to try and get around that too. But obviously you can't exploit it. However, if you go and the main purpose of your trip, and in the times when I was overseas too, you could claim 100% of the airfares, even if you went, say, for a week's holiday, if the main purpose was just on business, and that's why you were there for a special meeting or a conference or seminar, you could claim 100%.
Yeah, fair, I understand. There you go. So that makes you not that we can go overseas too much, but
No.
And what about with vehicles for wives and things through businesses?
Once again, if you can keep a logbook, so that when your wife is going out, she's going via the post office and via anything, picking up supplies, as long as she puts in that logbook for 13 weeks, then and maximises that, can make a big difference. Or if you're using the vehicle, make sure often you're using her vehicle too, so you can justify the commercial use of it.
Right.
And yes, that's a grey area, but yes, you can exaggerate it.
So, and John, I think your wife does, she was telling me she does like 700 Ks a week, I think.
Yeah, she does a bit of driving. Yeah,
That's a lot of driving.
yeah, she does. Kids are a bit. Yeah, they go to a private school in Bacchus Marsh, so there's a bit of driving to do.
Yep.
So she's constantly saying, "I think we need to upgrade the car." I'm like, "Oh, just a bit longer, just a bit longer, just a bit longer."
Yeah, well, that's interesting, because both John and Shane, and probably a lot of people out there, are going to be like this. They've with this accelerated depreciation, they've depreciated bloody everything off. There's nothing out there to depreciate on their balance sheet. Is that fair to say, Milton? How do you?
Yeah, and the problem is, of course, when you bring it forward, you're not getting that. In the past, you'd spread that tax deduction over a number of years, over, suppose, the life of that vehicle. Whereas now you're taking it up front, which is much better from a tax. So it's saving tax up front, but it then means in the future you haven't got as many tax deductions on depreciation, which is always a nice benefit because it's non-cash, but it didn't affect your cash flow. So you need to plan for that too. But you're always better off bringing forward expenses and minimising your tax this year. And COVID is a perfect example. But having said that, most businesses I've spoken to have done far better out of COVID. Many have been busier with COVID, and they've had JobKeeper, and they had cash flow boost in the earlier days, and their figures are far better in the majority of businesses I've done, except for hospitality, that have really suffered in tourism. They're the big, but most tradies have done well. How have you guys done?
We're probably up 400% bottom line.
Yeah.
400%.
Yeah, bottom line.
Right,
And we're like, our months are getting bigger and bigger. Like, we're probably about to do, revenue wise, probably double our normal revenue this month.
Yeah.
Than we would have done not take COVID out of the picture, go back further before COVID than we would normally do.
Yeah.
So we've had the lull, we got the JobKeeper and all that, and then later part of the year it just took off like a rocket.
Yeah.
Is that dealing with people moving to more remote solutions and things, or are they
no,
they had cash, so they were growing?
No, they had it, because we deal with a lot of industries, obviously, as you know, Hugh, and obviously dealing with a lot of trades. The trades just kept busy, so they're just busier and busier and want more and more stuff. But then you've had certain industries where they virtually closed when all this happened, and then all of a sudden they're kicked off, like in auto industry and different things. So people pulled all their money out of super, gone and bought cars. They're having the biggest years they've ever had. And they're just spending money like no tomorrow. It's just like, we need the same thing. We need things to write off. What are we going to write off? Oh, new servers, new computers, new whatever.
Yep.
So they want to spend the money now, because leading up to June 30th, but then now it's been extended. So now they're going, okay, we can do some more, in September and October.
Yeah.
Yep.
I mean, you're in some ways rushing now
Yeah.
to do big purchases. Because I think that accelerated depreciation for up to 250 is extended for another 12 months. Is that right?
Yeah, you're right. You've just been extended. Yep.
Yep. So you got a bit of time there, I guess. to buy another bloody dump truck or something, John.
Say again, mate.
You got enough time to buy another dump truck, you're right.
I already bought one, so it's on its way.
Yeah, yes, I'm right.
There's also quite grants too, Hugh. Because of COVID, there's a lot more grants available, and they're easy to apply for. Business Victoria. There's one for technology. Not a great deal, but it helps to get to buy some more equipment. There's a $1,200 grant towards that. You may as well take advantage of that. It's easy to apply for. There's mentoring schemes. There's a large grant available for agribusiness and certain other industries of 20 grand, which is worth looking at, depending if your business qualifies for it. I don't think either yours do, Johnny or Shane, but someone you deal with, Shane May, depending on your clients, might have that availability. And I've never seen so many more grants come out of the government since COVID, and they're simple to apply for. So it's being aware of what's around too.
They're state government grants, that
State and federal.
and federal. Okay,
Yep.
sure.
Seagrave Geelong had some too.
Yeah, you're right. The local councils also have. Yep.
Yeah. So there's some in Melbourne, there's some in Geelong.
Yep.
It's worth
Seems
just
to me
have a look.
the smaller the entity is in the smaller the government, as opposed, the less good they are, it seems.
Yeah, true.
That's what I found. I was looking at the state government ones just last night, actually. And I sort of,
Where do you find these? Where you can look for grants? Sorry.
Yeah. One, talk to your business coach. You'll know about them, number one. And secondly, that's the first place. And then if your accountant's on the ball, he should have told you about them. He should have made you aware of those grants.
yeah, I'll send them to you. It's Grants Victoria Government, I think. You'll find.
Business Victoria, and also Victorian Chamber of Commerce and Industry, VCCI. They're the two main areas. Plus your local. I know my local shire last night are giving $1,000 to anyone who applies to go towards professional marketing or accounting advice. So, and they did that. They did that 3 months ago, and it was all snapped up within 3 days. So now they're extending it. I'm sure some of your shires are doing something similar.
I'll look into it. I'll speak to the accountant and Hugh.
Yeah. There's probably a couple of little ones in there we could jump in for. I mean, as long as they don't take too long to apply for and things, I'm an advocate for them.
Yeah, and you're right. But these ones that I agree, in the past, the grants to apply, the amount of work to do was ridiculous.
It's like hundreds of hours of work and weeks.
Yeah, I agree. And it just wasn't worth it. But these ones now are much simpler and easy to apply for, and easier to qualify.
Yeah, absolutely. So another one that's I've seen recently, guys, with people's financials, as in we're getting towards the end of the financial year, we're looking at them closely, but I find that sometimes accountants take things that are real business expenses and claim them as drawings. Like the bookkeeper goes and puts them as drawings. That's like a little thing that one of the things I find, holy moly, those tyres are, $1,000 worth of tyres, but that's for my work car. What are you pulling it out for? Things like that. And there's vice versa as well, in terms of there's things that probably should have been taken and go straight through. It depends on, like, it's a classic one for me personally, was a place that services motorbikes. It was presumed to be a personal drawing, and I go, well, hang on, they serviced my car. So how do you recommend you keep on top of those sort of things, Milton? Or do they?
Yeah, no matter how good your bookkeeper is, you've got to run your eye over how they allocate, because they make mistakes too. My bookkeeper, even though I'm an accountant, and she's also an accountant, but now she does bookkeeping, and really well qualified, still makes mistakes. And every time she does my work, there's the odd mistake there, just through she's really thorough, but misinterpretation or misunderstood or at the spur of the moment. So you've got to, your business better than anybody else does. So something to you will stand out really easily, more so than your accountant or your bookkeeper. So don't just rely on them. At least the information they plough through, just see how they've allocated it. Just run your eye over it, and it should show up very quickly to you.
Yeah, fair enough. Maybe I'll just refer back to my list there again and see if there's anything else we possibly have missed and things like that. Super and accountant questions, but
Yeah.
how about you guys? Is there anything else that you think have cropped up? We haven't talked about super yet. Have you got Johnny and Jane? Have you thought about that?
What? Sorry.
Have you thought about superannuation this year and do it regularly or not?
No, I just pay. I just pay it for my employees. Yeah.
Oh, that's good for yourself, or just for someone else you pay?
No, I haven't started paying my own super yet. I've got to get that on board. It was only baby steps. So now, now that we're making a little bit of money, I've got to start contributing to that.
Yep. Fair enough. Just found that's a bit of a gaping hole with most business owners, although I think, Shane, you might be a self-managed guy.
Yeah. So one of the questions I probably got from Milton is, how far can you go back on your super that you've missed the gaps? So I know it accrues, I wasn't sure if it's up to 5 years of what credits you haven't put in.
Yeah. Yeah, it's an interesting one. Go.
Yeah, that's something you check with your accountant. I'm not up to date with that, Shane, what the current legislation, because as I said, I'm out of accounting. But yes, you were able to do that. Get your accountant and give you that answer very quickly on how far back you can go.
I'm pretty sure.
Super specialist.
Pretty sure it was 3 years, but it only started. I'm not sure if it started 3 years ago or 2 years ago. You could only do it 2. So that's the thing. If you call it catch up.
That's correct. Yep.
Catch up.
It's called catch up. Yep.
The terminology. So it's certainly not 5 years. I can guarantee you that, Shane.
Yeah, I wasn't sure. I just knew there was something you could go back, an opportunity to dump extra funds in.
It's definitely last year is for sure, because I'm actually doing that. A year before, I'm just not sure.
Yeah.
Yeah. So.
And Shane, you can do that for your wife too. It's not just yourself.
Yeah, we've got a self-managed super fund, so
even better.
But one of the things, are you across self-managed super funds much, or?
Yeah.
Yeah. Can you sell a property and loan the money to the super fund for that property from your own name, or cover the gap until the super fund pays it off? So, for instance, I'll give you an example.
Yep.
The property's worth 700,000.
Yep.
You've only got 200,000 in the super fund. The super fund wants to buy it. It buys it and pays 200,000. Then still got to pay off the other 500,000 over an agreed term to us.
Yeah. To do that, you have to set up what's called a bare trust. So it's number one, to buy property. Have you got any property in your super fund at the moment?
No.
Okay. With the super fund, you have to set up a bare trust, so it's got a separate entity to the super fund. So that's number one. Number two, super funds can borrow, but usually it's limited to around about maximum 70%. But if you want to do it through a bank, not your own money, then the mainstream banks will not lend to super funds at the moment at all. So it's only the second tier funders that will lend to super funds, and they charge a higher rate. However, the higher rate at the moment is only about 5%. So in normal times, it's still bloody cheap money. It's not expensive. But to do it yourself, you'd have to set up a structure through the bare trust to lend that money across, so it's all seen as a separate entity. But once again, talk to your accountant about that.
Yeah, that's all right. I thought it might be another way of getting money into the super fund that's appeared to be at minimal tax.
Yeah, no, I understand what you're saying.
Yeah, well, that's the challenge for all of us who are mid-40s or whatever, aren't we? Trying to get money, or older, trying to get money into super fund. You can't get it fast enough.
And also use it too, because, finance, depending on the shares too, and they're up and down all over the place. It's not, the return in super is not great at the moment. Certainly improved up since COVID fell, but I know with my super, all the shares I had in there, they dropped 40% with COVID, and yes, they've recovered, but they've just recovered. So I still haven't done a lot better. Lucky, I suppose, but it could have been worse, but there's no growth.
So that brings up the challenge, though, if we do want to get property and super, and you don't have a huge balance, you got some balance, but not, let's face it, property don't start until you're talking 600 plus or easy.
Yeah.
It's pretty hard to get super in there. That's pretty hard to get property in there without having a bare trust and second tier lender.
Yeah.
Is that right?
Yeah, correct. But you should be, especially for property, making sure you are borrowing in the trust too, not just rely on the money you've got in there. And because you can borrow, depending on the structure of the trust and how much you've been putting in there, as I said, you can borrow up to 70% through a financial institution, as long as you can show serviceability, like any loan. So rather than just buy the property, make sure you have the bare trust and you borrow too, like you would for an investment property or your own property that you're using for business.
I guess since we're talking about tax, how does that relate with super? Just because some people say, oh, you put money in the super. I guess this is for you, John. If you put some in, do you save tax? They go, well, depends how much tax you're paying.
Yeah.
I think in at least John and Shane's case, you're probably going to be on a pretty low personal rate. That'd be fair to say.
I've got a bit of an issue there, but yeah, we balance around the 30, that 31.5 cent rate. We try and balance around, but we're using a lot of things to offset with all the property developments and different things we do. So kind of obviously juggling one side to the other to try and offset it all. But we do have a bit of a tax issue because we've got a fair bit of money to move around. So.
Yeah, fair enough. And of course, with super, you still pay tax on that money as well, like 15 cents. So if you're only paying 30, it's not that much difference. Not found.
Yeah. And Shane, because you bought that business too, and you're very aware of this, I know, but make sure you've got the plant and equipment valued as high as possible so you can get that 100% write-off. So in the deal you do, obviously the seller will no doubt want the plant equipment to be valued as low as possible. You want to be as valued as high as possible. You can get a surveyor to check that for you even after you bought it and have it revalued. Yeah,
and I've got their original invoices as well. So accidentally got sent to me by the broker. So if they try and value it down, we've got somewhere to start.
They will want to value it at written down value for taxation. Basically, what's on their depreciation schedule. That's what they'll be trying to put through the business.
Yeah.
You need to argue the fair case, but also just check with your accountant whether you can have it revalued at even if you can't get it to be as high as you want, you can have it revalued and then claim the higher rate of depreciation.
Yeah.
Unless that's changed. As I said, I'm not giving tax advice. I'm just talking practical business advice.
Oh, that's interesting. Yeah, I would have thought you'd have to actually only write down what you've paid for it, literally. So if you buy the business at a discount, but the equipment's worth more, so to speak.
Yeah, but that's where you have it revalued by quantity surveyor.
Yeah, and that probably leads on to properties and that. Any properties you've got, you might not think that you can claim, but there's a shitload of deductions you can claim in depreciation, and you might not be aware of it if you're on your own premise or whatever.
Yep, you're spot on there, Shane. Yep.
Yeah, well, that's interesting because I'm actually looking at buying a property, but it's sort of, just suppose it's, I don't know what it is, I haven't even got there yet, but it's suppose it's 600, right? Grand. It's a capital purchase, but can you write down a portion of that?
It depends on what you're buying. You buy a property itself.
Yeah.
As in what, residential or commercial?
Oh, residential, sorry. Yes.
Yeah. Well, you can certainly claim drapes, anything else in the kitchen equipment and so on, anything else, basic stuff, carpets, anything that's depreciable. It can't be part of the capital structure, and you can't claim it in the first year either. normally, although with this new accelerated rate, that brings it forward.
Right. Oh, fair enough. Yeah, there's a few tricks there. Right, we've covered an awful lot, haven't we? Is there anything left looming there, John, that you want answered?
Me? No, it's more for me. It was more like an info session. I'm fairly new at this stuff, so it's got a good insight to see what we can sort of look for and grab the accountant and say, hey, what about these ideas that you guys have shared with me? So see what we can learn.
Excellent. And you, Shane, have you got some good ideas? Have you got anything left? You want
I want to know about the tax havens in Vegas and the Cayman Islands, and
I want to know that too, actually.
because all the businesses in America go to Vegas because there's no tax.
Yeah.
What's the Aussie equivalent? Vanuatu? I don't know. Is it?
No, it's not even that. But it is the Caymans and it is Vegas and it's Isle of Wight in the UK.
Yeah, Ireland.
Yeah.
But the thing is, with all these agreements between the countries, it's hard for not to sort of track back into Australia to get taxed.
Yeah, but part of the problem too, it's also based on residency, and because you can't travel and you can't be overseas, that cuts a lot of that problem now too.
Mm.
Oh, so unless you've got an existing, unless it's already been set up,
Yeah,
so, well, we can't move because of COVID, so therefore you've got an excuse maybe, but
it's very, very difficult at the moment. Yeah.
yeah, fair enough. Yeah. Oh, fair enough. All right. Well, if there's nothing more, I guess we should wind it up then.
Awesome.
Come on with our day. Glad you guys could join us, and for John and Shane's purpose, and Wilton, I do run webinars like this every month. We normally have a few more people, admittedly. I think the next one is on financial accounts, profit loss, balance sheets, cash flow statements. For those who need a bit of help in understanding how they all work together and how to use them in your business, especially trades businesses, because they seem to, businesses that have lots of depreciation or high costs of sales, they sometimes have troubles getting their heads around what's really going on. So apart from that, thank you very much.
Okay,
Thanks. Thanks. Good to meet you, Shane. Johnny.
Yeah, good to meet.
Likewise. Thanks, Milton.
We'll
Bye-bye.
have to chat with you sometime, Shane. I've been meaning to catch up for ages, actually.
Yeah, no, I need to catch up with you too. Got some stuff I want to catch up to you about. So, but anyway, all is good. Thanks, Hugh.
Cool. All right. See you then.
Bye.
Thanks, guys. Bye. Thank you.